Okay, something just broke in the crypto market. Seriously, after months of just kind of hovering, Bitcoin has suddenly smashed through a huge price floor, and it's sending these shockwaves all through the system. And listen, this is not just another dip. This feels different. All right, let's dive into this investigation. On Tuesday, this was the number. This is what flashed across screens everywhere and made traders just stop dead in their tracks. Bitcoin's price didn't just fall, it completely plunged, hitting a really shocking low of $99,966. Now, to really get the gravity of this, you have to understand that $100,000 wasn't just a number. It was this massive psychological wall. And this is the first time Bitcoin has been below that level since all the way back on June 23rd. The fortress has been breached. Yeah, that's the billion-dollar question, isn't it? Was this just some random fluke, or are there much deeper forces at play here? We've been combing through all the data, all the analysis, and we've pieced together the clues. Let's start with the first one. So our first clue takes us to a pretty unexpected place, the world of artificial intelligence stocks. Now, I know that sounds weird, but as you're about to see, these two markets are way more connected than you'd probably think. So here's what's so interesting. It's the type of investor, the kind of person who's drawn to the whole high-risk, high-reward world of crypto. Well, it turns out they're often the exact same person who's drawn to the high-growth, high-valuation world of AI tech stocks. There is this huge overlap, and it basically creates a financial bridge between two worlds that seem totally separate. And, when one side of that bridge starts to shake, the other side feels it, like, immediately. On Tuesday, the tech-heavy NASDAQ dropped over 1%, and specifically, big AI stocks like Palantir had a major sell-off. Why? Well, there was this growing anxiety over what analysts were calling eye-watering valuations. And that fear, it didn't just stay put in the stock market, it bled right over into crypto. Okay, so a panic in the AI market gave Bitcoin that initial shove. But here's the thing. That shove only worked because the crypto market itself was already standing on really shaky ground. And that brings us to our second clue. We are looking at an exhausted market, one that was already totally worn out. This quote from Han Lee, the founder of Codex, just captures the mood perfectly. Think of it like this. The market has zero energy left. It is so tired that any piece of bad news just hits it like a sledgehammer. But good news? It just kind of bounces right off. The momentum is just gone. And this is a great way to think about what market exhaustion actually means. For months, the trend was kind of sideways, maybe slightly up. But that trend just ran out of gas because there wasn't enough new buying pressure to keep it going. The market was vulnerable, basically just waiting for a push. Which brings us right to our third and, maybe the most crucial clue of all. The market is exhausted because a really key group of players is just missing in action. So the question isn't just about who's selling, it's about where are all the buyers? According to analyst Ed Engel, the everyday retail investors, the people who famously buy the dip and help prop up the price, they just aren't showing up this time around. And analysts are debating why. Is it economic anxiety, a shift in sentiment? Who knows? But their absence is creating a total vacuum. So this right here is the whole dynamic. In a normal bull market, you expect the long-term holders to sell and take some profits off the table. That's step one. Then, in the past, step two would kick in. This army of retail investors would see a bargain and just rush in to buy. But this time, step three happened, which was nothing. They're just absent. And without that buying support, the price just keeps on falling. An AI sell-off, an exhausted market, and missing buyers. That is a dangerous cocktail. But our final clue suggests this might be more than just a bad week. It's a chilling warning from history that puts this whole situation in a much more serious light. So take a look at this timeline and how this builds. Analysts have pointed out this really disturbing parallel. See, October is usually a very strong month for Bitcoin. But back in October of 2018, that seasonal strength just vanished. And the very next month, the market collapsed. Now fast forward to today. October 2025 just passed, and that same historically strong seasonality, it failed to show up again. The pattern is identical. And we need to be really, really clear about what happened next in 2018. The price didn't just dip, it plunged by 37% in 1 month. That is the historical precedent that has the market so incredibly nervous right now. So let's put it all together. We've gone through the clues, and now we can basically close the case file on what caused Bitcoin's $100,000 plunge. So here's the whole story. A sell-off in AI stocks started this chain reaction. It hit a crypto market that was already exhausted and super fragile. The price started to fall, but the retail investors who are normally there to provide support were just nowhere to be found. And casting this dark shadow over everything is the warning from 2018, suggesting this could be just the beginning of a much steeper fall.
So that's what all the evidence is telling us. And it leaves us with the one question that really matters now. Is this just a painful but temporary price correction on the way to new highs? Or are we witnessing the first chapter of a much darker story for the crypto market? Well, I guess only time will tell.